in Europe and in the US. Ahold Delhaize has reported fourth quarter earnings and operating margins that beat estimates. That's as the Dutch retail giant reduced its supermarket costs. Let's get straight to the CEO. Joins us from Amsterdam. He is Dick Boer. Dick, great to have you on the programme. So you seem to be taking costs out of the business quite quickly. What is allowing you to do that in the United States?
We continue, of course, to focus on improving our efficiencies in the United States, driving also, of course, the synergies we need to deliver according to our plan by the merger of the two great companies, Ahold and Delhaize, coming together. And at the same time, of course, in a deflation environment to drive volume growth, which is important also for our business.
Dick, you have a target of 500, reduce costs by 500 million euros. That's set by 2019. I'm just wondering, from the tone of your report this morning, could we expect you to hit that number sooner or more quickly?
We're not changing the timing of our synergies. We clearly restated also today that for this year we will deliver the 220 million, which is based on the 22 million we delivered last year, so close to a 200 million for this year again. And we continue to drive, of course, the synergies out also in the next years to come, to be sure that we deliver our 500 million.
You have a big business in the United States, of course, Dick, some 64% of revenues last time I checked. We heard last night from Donald Trump, a little bit light on the detail in terms of the taxation plans they have, but border tax, this is something that's agitated many in the retail sector. Tell us how this impacts your business and how you're planning for the possibility of a changing tax regime.
Yeah, thank you for the question. We of course, food retailers in general, we mostly source our products in the U.S. market. We clearly have a lot of the production is coming from the U.S., so we are not expecting that will impact us a lot. We are not a non-food retailer. We're really food, and we source, as I said before, all our products mostly in the United States. So I'm not expecting a big impact on that.
So there's no change to any of your sourcing policy, no change to the way you're doing business at all in the US?
Not at all at this moment. We, of course, get our fruits and vegetables also in off-season. So in the winter now, we get more fruit and vegetables over the border. But I don't think at the end of the day that will, let's say, on the total consumption in the United States have that huge impact versus non-food retail or general merchandise retailers. So, of course, there will be something, but I'm not expecting that it will be, let's say, a big impact for our company.
Dick, you also make reference to the return of inflation, which is going to be cheered by many. I suppose a very simple question: what makes you so confident that you're going to get this return of inflation as soon as the end of the second quarter? And more importantly, are you going to pass those prices on? Is there an ability to pass those prices on to the consumer? Are they robust enough to take price hikes?
No, first of all, most of the deflation was caused by commodities like dairy, eggs and meats, etc. They, of course, cycled back in the second half of this year. That's why we are cautiously optimistic about returning back in these categories. Of course, we cannot predict anything on this because you never can predict inflation and deflation. But that should help us at least to be back in normalized situations around the commodities. The economic growth, if the economic growth continues, we also expect that would start, let's say, growing consumer, that the consumers are also more able to start paying a bit more for the products we sell. So I'm also expecting that finally that will be absorbed by the customers when the economic situation improves also.
Can I ask you about M&A? Can I ask you about M&A in the food production sector, in the food sector? We saw that failed attempt by Kraft to take over Unilever, of course. Is this something that concerns you and businesses like yours, that food companies will force price rises on supermarkets if more M&A such as that is allowed?
Well, consolidation is not new in the markets we operate. It's our industry. Let's be clear. We just consolidate our business. So from two businesses of 35 and 25 billion to 160 billion companies. So that's not new in the markets we operate in. On the brand side, I would say in general, we are, of course, retailers. We sell a lot of own brands and fresh, which, let's say, is maybe less impacted by the you mentioned possibilities of M&A. Secondly, so if you look at our sales, 1/3, 40% is brands, and the rest is fresh and own brands. So we are more able also to determine our own cost prices with the non-branded suppliers.